start recording. Okay, can you guys see my screens? Let me know. Okay, so this is a new Forex video that we're going to cover day trading. And although it applies to Forex specifically, it does also work very well with stocks. However, it's one of those things that actually works better with Forex. Go figure, a day trading thing that works better with Forex. But it's very powerful. I used it to make a lot of money with a small account, and you can too. Okay, but you got to follow it with very strict discipline. All right, so it's kind of a all-in-one trading strategy. I developed it basically when I used to work in London, when I used to see exactly how the Forex banks would work and exactly how the algos in London specifically would work. Okay, so you'll see here I call this strategy the London push. Okay, now there's another strategy out there called the London daybreak strategy. Now let me assure you, what I'm going to teach you is nothing at all like that. Okay, that strategy is just a bunch of bullshit. And I looked at that strategy, and it works some of the time, and it fails most of the time. But it made Market Traders Institute a lot of money. They give it away for free. Now you can get it online, and it's just nonsense. What I'm going to teach you is going to be based around actual reality of the modern market, and specifically modern algos. Okay, and how the algos and how the algos work in the Forex markets. All right. So when we're dealing with day trading, we really want to focus on what's the market maker doing, because it's really the short-term market maker that we really want to pay attention to. Okay, because he's the one that moves the stock from short-term liquidity to short-term liquidity, right? I mean, if he's going to push a stock around or an asset around like a Forex pair, he's going to do it for like 10, 15, 20 pips, right? And, you know, we really want to be focused on him. We don't want to be too concerned about what the big banks are doing per se, or what the big asset managers are doing, or the big prop traders are doing, because they're more interested in 20 to 50 to 50 to 2,000 pips, right? So when we're day trading, we really got to be a specialist in understanding the short-term market maker and how he behaves. Okay, so we're going to just actually jump right into the London push strategy and how I actually do it with actual examples. Okay, so you guys, by the way, for those of you watching this recording, and you may have bought this afterward, this is my students right here who have been through my full course, and they're getting this as an add-on bonus to what they're doing in my full course. Now, obviously, if you take my full course, you're going to get tremendous more value, and you'll be able to do this strategy more effectively. But even without the full course, you should be able to make a lot of money just doing this strategy if you stick to it in a very detailed, specific approach. The first thing we're going to do is just put in a bunch of Forex symbols here. So we're going to do USD, JPY, USD, JPY, and we're going to go USD, CHF, and then we're going to go GBP, USD, and I go Euro, USD. Okay, so we've got the major pairs here, and I would stick with the major pairs. You know, you might want to throw in the Euro, GBP, but you can find enough trades just on the major pairs that it's not really going to be an issue. Now, the next thing we want to do is we want to go right down to a 1 minute time frame. Okay, and let me just get up a pair here. We'll work with the euro US dollar. So here's the euro US dollar 1 minute. Now, what's really important when using this strategy is time of day. Okay, it's called the London push for a reason, because there's at a specific time during the day, the algos are all firing, and they fire both at the London open and they fire at the London close. That is when the market making algos will fire, and that we specifically only want to take advantage of those two situations. Now, I found it to be far more powerful on the London close, right? So what we want to do is right away we want to identify the time between the New York Open and the London close. Okay, so if we look at a chart here, the New York Open is usually the New York banks, and that's what I'm specifically looking for, usually will open anywhere between 8 a.m. and 9 a.m. New York time. Okay, now the London close, okay, is, so I start looking at this. Let me just get some things here. I start looking at this around usually between I start at 8 o'clock, right? So I mark 8 o'clock as my start time, okay? Now I will trade this strategy up until 12 o'clock at the very latest, because the London close is 11 o'clock US New York time. Okay, now do you notice anything here? Look how non-random that market is, right? The time between the New York Open and the London close. Look how non-random that market is, right? Let's look at some other ones here. All right. And let's do the same thing. We have 8 to 12. Now you might say, Steve, well, that's pretty random, but not really, right? I mean, there's 3 things that a market can do, right? There's 3 things that a market can do. Right? A market can do what 3 things, right? A market can trend higher, and we know that by pressing limits, right? Where the market maker has big buy orders below the market, and when the market makes a new high, he presses it here, and he rests his order there. When the market makes a new high, he presses his order higher, and it rests there. The market makes a new high, and he presses his order higher, right? So that is a lopsided buy-side market by the market maker, because he knows that the amount of bids are much higher than the amount of offers. Okay, so a market will trend higher, right? So that is the one option. Okay. What's the other option? Right? The other option is the exact opposite. We have an unbalance of sell orders, and the market maker will rest his orders here. When it presses lower, he presses his limits lower. You run into a wall of orders, it can't go higher. When it presses lower, he presses his limits lower, and he runs into a wall of sellers, and the market goes lower, right? So you have a lopsided buy-side market where there's much more buyers in the market, and you have a lopsided sell-side market where the market maker, who can see all of the resting orders on the order book at the big banks, right? He can see that, right? I think one of my students here, Ellen, Ellen works for a big bank. Which one do you work for, Ellen? BBVA. What is that? That's what's the name of that bank? What is that? That's a Spain bank. It's a big Spanish bank, isn't it? BBVA. So Ellen works actually at a big bank, but he doesn't get access to the trading desk. But if he were to get access to their trading desk, he would be able to see what's called the intrabank market, right? Banco Bilobo Vacana, Argentina. Okay. All right. So good try, Steve. So what he would see is he'd be able to see the intrabank market, which would obviously his bank in Spain would have access to that market. And what they would see is they would see, in a case like that, to see big sell orders above the market, and they would see small, and then they would see small buy orders below the market. Okay, so if you work at a big bank, or if you're a trader on a big bank, or if you're a market maker, you'll be able to get access to this information. So when you see all these big orders to sell, are you scared to sell the market and push your limit orders lower? Yes or no? Hopefully not, right? But unfortunately, we retail numpties, we can't see that, okay? So what I'm going to actually do is I'm going to use this video, up until this point in the video, and if you don't believe this is true, you're just clueless, okay? The intrabank market can see these orders. The market maker can see these orders. We can never see these orders, okay? So, but there is a way to exploit this condition and exploit the algos that exploit that condition. So right now, I'm actually going to end this video as the first part, as kind of a sales pitch towards if you're really interested in learning how to day trade, specifically the Forex market, but this will work with stocks too, okay, because there are order books for stocks as well too. It's just, it won't work as well, but it will work with stocks too. I'm going to pause it right here and use it as a promotion and put it on my YouTube channel. And I'm going to show you how you can use this information in what I call the London push strategy, because I learned it by actually working at a large bank, and I was able to see these orders, and then I was able to see the algos exploit these orders, okay? So if you really want to learn how true markets work, okay, just buy this Forex course. I'm going to offer it separately on my on my website, and it will be an introductory thing. Remember, it will not be as detailed. It won't include like massive education on liquidity. It won't include stop runs. It won't include that, but it still will make you a lot of money if you use it. Okay, so that's it for the promotional part. I'm going to end this video right now, and then I'm going to restart the video, and we're going to actually get into the course material part of it. Okay? Thank you. Bye for now.